Welcome back to the Deep Dive. Today, we are plunging right into the really dynamic world of real estate. We'll focus quite a bit on South Florida, but the trends we're seeing, while they have ripples nationwide, we've got a stack of interesting sources here that give us a complex, frankly fascinating view of the current market.
That's right. We're looking at a Miami real estate investing newsletter for that local flavor, a Fannie Mae report on national home price expectations, some revealing Fed data on real estate wealth, news on major Miami development projects, Tesla's interesting move into housing down in Houston.
Quite a mix.
Oh, yeah, and a big Blackstone acquisition in Miami Lakes, those ongoing legal fights over mandatory NAR membership, an ATUM report digging into property taxes, and even plans for, believe it or not, luxury car storage in Broward.
Wow, okay, so our mission today is really to pull out the key insights from all of this, give you a clear, concise picture of what's happening out there.
Exactly. We want to identify the main trends, the challenges, the opportunities without getting, bogged down in just raw data.
Absolutely.
Yeah.
Let's start with something crucial. That persistent housing shortage we keep hearing about nationally.
Right. And it's interesting to see the legislative efforts trying to tackle it. There's this bipartisan bill moving through Congress, the Housing Supply Framework Act. Basically, it aims to help modernize zoning and land use regulations.
Things often blamed for hindering new construction, yeah.
Precisely. They're often pointed to as major hurdles.
What strikes me about this act is it doesn't seem to be about federal mandates. It's more about empowering state and local governments.
That's the idea. Give them guidance, technical help, show them what's worked elsewhere so they can make smarter decisions locally about land use. No top-down orders.
And it seems to have pretty broad backing.
Huge backing. Over 140 organizations are on board. Think NAR, the National Association of Realtors, the NAHB, the Home Builders Group, Habitat for Humanity. It really signals how urgent this issue feels across the board.
And the main goal of all that support?
Simple, really. Tear down the barriers holding back housing development and ultimately open up more housing access for everyone, regardless of income level.
Okay, shifting gears a bit. For anyone thinking about buying or selling, what are the experts saying about where home prices might be heading?
Good question. We have the Q1 2025 Home Price Expectations Survey, the HPES, from Fannie Mae and Pulsenomics. They survey over 100 professionals, folks in real estate, mortgages, academia.
So what's the crystal ball showing?
Well, the consensus projection is for about 3.4% average growth nationally in 2025, and then maybe 3.3% in 2026.
Interesting. That's actually down slightly from their previous forecast, isn't it?
It is, yeah. Last quarter, they were projecting closer to 3.8% for 25 and 3.6 for 26.
So what does that moderation tell us? Is the market still growing, just maybe not at that breakneck pace we saw?
That's a very plausible take. The expectation is still for prices to rise, definitely, but that slight dip in the rate of growth, it could suggest things are settling a bit after the really rapid run-up of the past few years. A sign of stabilization, maybe?
Makes sense. Still climbing, but maybe catching its breath.
Exactly. But, these are still just projections based on current sentiment. Lots of economic uncertainties always play into this.
Understood. Now let's talk luxury. Because based on our sources, that segment seems to be humming along quite nicely.
Oh, absolutely. The Federal Reserve data analyzed by Realtor.com is pretty eye-opening. Total private real estate value in the U.S. hit a record $48.1 trillion with a T in the last quarter of 2024.
Wow. That's up 7% from the year before.
Yep. And here's the kicker. That growth is being largely driven by the top 10% of households by income.
Almost double the value since 2016, the report mentioned. That's some serious wealth accumulation. And owner equity is up too.
Significantly. Homeowner equity jumped 8.8%, hitting $34.7 trillion. Mortgage balances are up too, around $13.3 trillion. But the luxury market itself, it's really outperforming the rest. In February, it made up nearly 13% of inventory, but accounted for 7.5% of all sales.
And we have a very concrete example of this strength right here in Miami Beach, don't we? That huge sale.
We do. Canadian billionaire Patrick Dovigi just snapped up a waterfront mansion for almost $28 million.
Incredible property. Over 11,000 square feet, 7 bedrooms, 9 baths, a prime spot.
a true luxury enclave on Sunset Island III waterfront. And it's worth noting, the deal involved agents from the Jill Zetter Group at Coldwell Banker really underscores the high-end nature of this market segment. Big players involved.
Okay, changing scale a bit, but staying in Miami, we're seeing some pretty large-scale development projects getting underway.
Yes, indeed. Some major players, 13th Floor Investments, LeFrak Organization, and Related Group, they're teaming up on a big mixed-use project near the Douglas Road Metro Rail Station.
Mixed use meaning residential and commercial.
Exactly. Plans call for 2 towers, about 741 apartments in total, plus ground floor retail space. Big project.
And this isn't 13th Floor's only play in town,
Yeah.
right? They seem quite active.
Not at all. They're also pushing forward with Link at Douglas down in Brickell and the Casa Cipriani project over on Miami Beach. They definitely have a very active development strategy going right now.
What does that tell you about their view of the Miami market?
It signals strong confidence, I think, especially in areas with good transit links like Douglas Road. These are long-term bets on Miami's growth potential.
Now, let's jump over to Houston for a moment. There's a really innovative housing concept taking shape there involving Tesla technology.
Yes, this is quite fascinating. It's being billed as the first housing community in the U.S. fully integrating Tesla tech. Think homes kitted out with Tesla solar roof tiles, Powerwall batteries for energy storage, and naturally, EV chargers.
Wow, the whole package. And this is in the Oaks of Shady Acres community.
Yeah.
Built by Utopia Homes.
That's the one.
That sounds incredibly appealing, especially somewhere like Texas that's had, well, its share of grid issues. Does this promise more energy resilience for homeowners?
That's precisely the pitch. More reliable, potentially uninterrupted power. It's definitely a major selling point. And apparently, the demand is strong.
Really?
Yeah. Realtor.com reported only a few homes were left. And the prices, they're sitting above the local average. We're talking $524,000 to almost $545,000. They're drawing buyers from other states, even other countries.
Interesting. So people are willing to pay a premium for that integrated tech and sustainability.
It seems so. It raises really interesting questions about the future, How scalable is this model? How much extra are people willing to pay for this kind of sustainable, tech-forward living? It's been a watch.
Definitely. Okay, looping back to South Florida, we're also seeing significant moves from big institutional investors like Blackstone.
Yes, Blackstone just made a pretty substantial acquisition in Miami Lakes. They bought the Zulia multifamily complex, that's 359 units, for nearly $116 million.
Wow, works out to about $323,000 per apartment.
Roughly, yeah. And the current monthly rents there are running between about $2,300 and $3,400.
And Blackstone hasn't just been buying, right? They've been selling other assets in the region too. I saw notes about a Hialeah sale, some industrial properties, another complex in Miramar.
Correct. They've been active on both sides of the ledger.
So what's the read-through on that? Are they just rebalancing, or does it signal something bigger about their view of the South Florida market, shifting capital around?
It certainly looks like a strategic portfolio rebalancing. Buying Zulia suggests they still see strong demand in the multifamily rental market there, but the sales, well, that could be about locking in profits where they feel assets have peaked, or maybe shifting away from certain sectors or submarkets where they see less upside going forward. Active management, essentially.
Got it. Now, a topic that always seems to generate buzz in the industry: the legal challenges facing the National Association of Realtors, the NAR. There's another lawsuit now.
That's right. A broker in Atlanta, Jerome Milko, has filed a new suit challenging the mandatory NAR membership requirement.
This is similar to other cases we've seen pop up, right? Michigan, Texas, Pennsylvania.
Exactly. The core argument is often similar. Milko's suit claims unjust enrichment, basically saying NAR collects exorbitant dues over many years as a condition of doing business.
And a key part of this is access to the MLS, the multiple listing service, isn't it? Agents typically need it to function effectively.
Absolutely. The MLS is crucial for sharing property listings. These lawsuits, especially coming after that big settlement NAR reached with home sellers recently, are really pushing to decouple MLS access from mandatory NAR membership.
So the potential outcome could be quite significant for how the industry is structured.
Potentially transformative, yes. If agents could access the MLS without paying NAR dues, it could really reshape the landscape of real estate associations and potentially lower costs for agents, maybe even consumers down the line. Big questions there.
Another cost factor for owners and investors is property tax. What are the latest numbers telling us?
ATTUM Data Solutions put out a report showing the average property tax on single-family homes in the U.S. went up about 2.7% in 2024. It reached $4,172 on average.
Okay, so taxes went up. But I think the report also mentioned the effective tax rate actually dipped slightly.
It did, yeah. The average effective rate was a tiny bit lower than the year before. But because home values generally kept rising, the actual dollar amount people paid in taxes still went up overall.
Right. And 80Tom's CEO, Rob Barber, basically chalked it up to rising property values combined with higher operating costs for local governments, right?
Yeah.
Schools, infrastructure, all that.
Exactly. It's a key piece of the affordability puzzle that homeowners and potential buyers always need to factor in. Those costs tend to creep up.
Definitely. Okay, finally, it's always interesting to see new niche markets emerge. We have a kind of unusual example from Broward County, luxury car storage.
Yeah, it's definitely niche. Mark S. Gold, who founded the Ticket Clinic, is behind this project.
The Ticket Clinic guy. Okay.
Yep. The plan is to build a dedicated facility in Pembroke Pines, offering secure, high-end storage units just for luxury cars. They got the rezoning approved recently.
Inspired by places like Auto Vault in Fort Lauderdale, I gather. Catering to collectors.
Seems to be the model, yes. It's a 26-unit project aimed squarely at enthusiasts and collectors who need specialized, safe storage for their high-value vehicles. It highlights how real estate can adapt to serve very specific, sometimes unexpected, demands.
Fascinating. All right, we've covered a lot of ground today. Just to quickly recap, we looked at that legislative push to ease the housing shortage.
The forecast for more moderate, though still positive, home price growth nationally. The continued strength, maybe even outperformance of the luxury market.
Those major development projects taking shape here in Miami, plus that innovative Tesla-powered community down in Houston.
We also touched on the strategic moves by big investors like Blackstone, the ongoing legal battle surrounding NAR membership, property tax trends,
and even the emergence of specialized niches like high-end car storage.
Quite a sweep.
Absolutely. So whether you're thinking about buying, selling, investing, or honestly just trying to make sense of the real estate market right now, we hope this deep dive gave you some valuable perspective.
It's clear that the interplay between supply and demand, technological innovation, and shifting regulations is constantly reshaping the future of real estate.
Which leads us to maybe a final thought for everyone listening. With all this investment pouring into the luxury end and these technologically advanced communities starting to pop up, how do you think our very idea of home might evolve? What will buyers prioritize in the coming years?
That's a great question to ponder. Definitely something worth keeping an eye on and thinking about as these trends continue to unfold. We encourage you to keep exploring and draw your own conclusions.